future is a contract, it's a standardized contract and which is going to be traded on the exchange. For what? So that contract is to buy or sell the underlying asset in the future date at a specified price. If the underlying asset is going to be currency, which is called as currency futures. If the underlying asset is going to be a commodity, then it is called as commodity futures. Now coming back to futures. So these are all the few terminologies which we need to understand and which we need to decide for underlying assets for the commodities as well as currency. Now, let's say, for example, we have got multiple exchanges. So we have got NSE, we have got BSE, we have got MCX, NCDEX likewise. As far as currency is concerned, we have got predominantly NSE and BSE is playing a major role. So as I told you, the underlying asset is being decided by the exchange. They have decided for currency pair. Okay, so the first one. What is the lot size? They need to decide. So for all three currencies like USD INR, Euro INR and the GBP INR, 1000 is the lot size. So which means 1000 USD. Only for JPY INR, the lot size is 1 lakh. Okay, an expiry date which is being decided by the exchange. For currency, the expiry date is, it is going to be 2 days prior to the last working day. So which is nothing but your last working day minus 2 days. And that's what your expiry date is. Initial margin, it is being decided as a percentage of the value. Okay, so this percentage is being calculated based on some mathematical model which is called as value at risk margin usually, and also in futures contract we use some other model which is called as span margin, standard portfolio of analysis of risk. Okay, and this is how we used. So the initial margin will be calculated like this. So the thing is, like, contract value is nothing but your lot size into agreed price. That's going to be your contract value. At any point of time, now we can have a contract cycle. See, probably which I'm talking about, let's say expiry date is going to be every month. So we can have current month, next month, likewise. So in a currency, we have got 12 months contract. Okay, so that's the one. And as far as tick size is concerned, you got a tick size. So here the tick size is 0.0025 rupee. So I'll call it as, in, if I write it like this, 0.0025 rupee. So what is this? It is 1/4 of the paise. That's what it is. So quarter paise. I'm not going for 1 paise. It is not 25 paise. It is not 25 rupees. It is going to be quarter paise. 0.0025 rupees is called as quarter paise. This is the tick size for currency at this moment. It varies from, let's say, for example, one currency to the other currency. Now, so this is the value date is going to be the date at which you are going to deliver currency. So here in futures contract, it is going to be cash settled, not physically settled. So you cannot take a delivery of the currency, but you can enjoy the plus minus. Maybe you make profit here, you lose it in the spot market if you are a hedger, or you make loss here, or you gain it in the spot market. When I say spot market, you gain it in your receivables or payables. So that's how it is going to be. It is called cash settle.